It's great to have you back, Luke. Luke is the publisher, editor of The Forest from the Trees, and he's done a great job over the years. That's why his popularity has grown. He's helped a lot of people in these confusing times. So, um, Luke, when you were last here, you were saying we told the Chinese we don't want your money. Okay, and that was up here while the market had not even peaked. And you said I would sell Qs and maybe look at industrials. And uh, the dollar and the Qs did the same thing. That was a great call, and it was at the top. So we've bounced back. That's not the Chinese coming back in, is it, Luke? Do you think, or it's just like a technical bounce?
No,
This
I think
recovery.
I think it is I think it's partly a technical bounce, but I also think it is, there's been this discussion amongst the trading and investing community, where is the best put? We found it. The best put
Okay.
is the best put is Treasury vol. So if you call up the move index
Yeah.
on that chart,
Yeah. Okay.
if you call up a chart of the move.
I have it here
Oh, you just
somewhere.
had it. Sorry, it was down there. I
Uh,
just saw it. Right up,
you know,
right. Yeah, right there. Stop right between Lennar and
oh yeah,
like.
move. Okay. Thanks, Luke. All
Yep.
right, so he got what he wanted, and I'm going to go the bonds right now because that's really the big story, I think. Probably always has been, but is in your view, is it becoming more? Because I want to talk about this technical action that I'm not a fundy guy, but the technical action was it said danger, danger to me. Um, I know the move has come off, but it looks like a double top. We could rally again. We're putting in higher lows on this move. So whatever
Yep.
solutions they're getting so far, they're just temporary, right?
Yeah. Oh, it's they're papering over it, and ultimately, um, you can take that chart back 5 years. You can see every time the move hits 130, 135, they
Yeah.
panic. They inject and it's so there's this view amongst traders that Besant is different than Yellen because Besant's a trader and Yellen's an academic, and the reality is the markets are telling you they're not. They're the same. And ultimately, with that, it's very powerful because we know if they're not going to let the treasury market dysfunction, it's extraordinarily powerful. So it tells us, yeah, you could have long bond yields go back to, I don't know, 4.5, 4.8 on the 10 year. Um,
Okay.
but it's very powerful from a trading perspective because, yeah, I think we'll probably go back to the lows there, but I don't know that we'll go through the lows on the TLT
Okay.
for that reason, because it's very simply the U.S. government can't afford the interest rate above that. And the bond market starts to dysfunction. And then, there's a huge geopolitical side that I don't think people are
I
positioned, which
okay.
is,
So you want to bring up like Japan using their $1 trillion treasury bucket in the negotiations with the U.S. They've dropped that though, haven't they?
they drop that. And I don't even think it's that. I just think it is the issue is US debt to GDP is too high. And so the US debt in these negotiations with China in particular, but the whole world, we just showed ourselves to be an MMA fighter with badly broken ribs. And so we can be tough guy, and then they're going to punch us in the ribs, which is the bond market, and we're going to need a break.
Okay.
And ultimately, it's super powerful, I think, from a more longer term structural perspective, which is that the US does not have the leverage that consensus thinks the US has. And so then I think we have to start saying, okay, well, what does that mean? I think it means a much weaker dollar. I think it means much higher gold. I think it means, you know, and trying to manage this treasury issue. It's a very interesting time.
Okay. Well, I look at what happened here, and I'll just cover up the title of this chart, Luke. But really, we've gone nowhere in a year and a half between 95, a little spent a a week above it, but pretty much we've been in 95 to 85, this range forever. Okay. Um, Now this day that Paul came in and said they would provide liquidity was another test of the 85 level. I don't know why my dailies aren't showing, but let me try and pull it up again here. Auto fits. Huh, I lost data on it. So
But that's all right. I think that power, that chart, go
okay,
back to that chart.
this is it though, Luke. This is a day. This was the people are saying this was the what was it? It was a trade that people had on the wrong way overlay a basis trade.
The basis
Do you
trade,
be,
yeah.
do you believe that this was all because of a basis trade?
In no, I think it was a lot of it was the basis trade being unwound, and that's I think people are still missing the most important implication of that, the second derivative, which is why is there a $1 trillion basis trade? And the reason there's a $1 trillion basis trade is there's not enough buyers at prices the US government can afford for bonds. And so one of the biggest marginal buyers of treasuries in the last several years has been this basis trade. And the problem, it's fine, but the problem with it is that you now have the most powerful government in the world, in theory, financing with the equivalent of monthly payday loans with hedge funds who need to put up monthly numbers. And the way their business works, as you guys know, is if you get a spike in volatility anywhere,
Yeah.
their risk managers are going to tap them on the shoulder across the shop, and they're going to sell treasuries. And we've seen that
Okay.
over and over. And so, when you go back to that chart, the TLT, the long bond ETF, go back to the 5-year chart that you had up.
Okay. The
Um,
weekly.
yeah, go back to the weekly. I think it's super powerful. That range, you were saying we've gone nowhere since 23. So
Yeah.
in November 2023, with that thing breaking down,
Right
Yellen
here
shifted all the issuance
to
to
the front
the
end.
front end. But when I see that chart, that's yield curve control. And what if I told you that in May 2024 was when she started the buybacks? And then what if I further, it's a really interesting study. Take a look at what the price of gold has done since the TLT has gone nowhere.
Yeah.
It's
Exploded.
up about 60, 70%. Take a
Yeah.
look at what's happened to Bitcoin since the price of TLT has gone nowhere, which is yield curve control light type action. It's gone to the right. Oh, look at that. So gold from gold's gone from what? 1700? Gold's doubled. Gold's
Yeah.
up
1800.
100%. Yeah. Why is gold
Yeah.
doubling while TLT's going nowhere? They're proxies for each other. And the answer, when you sort of rule out the impossible, they're managing the yield curve. They're managing the long end. And the liquidity showing up in gold, liquidity showing up in Bitcoin, liquidity starting to show up in the dollar. And that's why the basis trade, right? The basis trade exists because there's not
So
enough
there's
buyers.
so
Yeah.
there's liquidity. I mean, the spreads, the T-bond market. I remember the futures pit at the board of trade, and you didn't even have to pay a tick to get in and out of a bond trade. You know,
Oh yeah, and yeah,
it was
and
the
that's what.
tightest. It was the tightest spread
Yeah,
on the street.
yeah, and that was trillions and trillions and trillions in debt ago, right? I mean, that was
Yeah,
not trillion. People say it's the most liquid deep market in the world, and the reality is all of the what we see on our screens tells you it's not, and what you see fundamentally. I mean, look, Fed has not sold a single 10 plus year treasury on net off its balance sheet since 2010 on net. And so if it's such and oh by the way, that was during a period of time when the yield curve was inverted last
yeah,
year, for the longest ever. So in theory, right, the ducks are quacking. Yield curve's inverted. They could have dumped most of that position. Why didn't they? I think I know
yeah,
why.
yeah.
You know,
They were
it all
dumping
fits.
MBS. They were done in the QT. They're still selling MBS and selling less treasuries with the
Yeah, and
QT, right?
it's yeah, and I think ultimately the answer is they can't do it without sending yields to a level that create a debt spiral, that create a crisis. And that, I think that's probably 4.8% on the low end on the 10-year, and I think 5% at the high end. I think you get the 10-year, I mean, empirically, we've seen 10-year 4.8 to 5 is a problem for everything.
Okay. I think we could go there. I wanted to ask you, I was reading that there's a huge rollover that has to happen in 2025 for treasuries. I mean, you look years out, it's not bad. But this year, for some reason, there's a huge rollover of debt. Is that true? Have you been talking about that at all?
I've not spent a ton of time on it. There have been a lot of people who have. It is true. I don't know the exact breakdown. I want to say it's like
It,
$7 trillion, something like that of
yeah,
roll.
yeah.
Yeah, it's a
Is
lot.
that
And
that's a problem, isn't it? The roll.
it's all relative, right? It's if the dollar's too high, it's a big problem. You need a weaker dollar to get it done, basically. You need
Okay.
the dollar liquidity to get it done. And so we're seeing signs of that with some of the Asian currency action at the right price of the dollar, at a high enough price of gold, so to speak. Um, the roll shouldn't be a problem, but it is dollar sensitive.
Okay.
I mean, the
Well, I'm going to give you my technical case. And I'd like you to come up with the narrative that would drive it there. So,
Sure.
okay, so this 85 level, you know how key it is. It's hit there a million times. And then this was the day the Fed said, we'll provide liquidity. I think this was an intervention day on the bonds. That's when both the market and the bonds were down and they recovered. Paul made some statement and they recovered. And if I cover up the title and I don't know it's a bonds and I'm just a trader, I go, wow, that got from here to here in a blink of an eye, and that this recovery is just corrective, and that we're due for something like this. And next time we take out 85, it measures down to 70, just arithmetically. um, so that's where I think, initially 78, back to the October lows back here. Um, but what would be the narrative to take the bonds down to TLT down to under 80 in this environment? What would
In this
happen?
environment, yeah, I think it's two things. I think it would be data. Like, we can see very clearly, and we've been writing about this for clients. What we now have a setup of is COVID economics 2.0, right? We've
Okay,
got
yeah,
we've got a treasury vol being suppressed by Treasury and Fed. They're not we can see that on the chart. We can see that in the comments. And we've got an interruption of supply chains, and we've got a government running a $2 trillion plus deficit with a slowing economy, which means the deficit's going to go up. So yeah, you could get you know, some sort of weaker dollar, higher inflation print, higher deficit print, supply chain disruption, big deficit. Like, those are the things, you kind of run through those. Are like, oh, that makes me want to sell bonds. That makes me want to sell bonds. There is, in that world, we know from COVID 1.0 economics, what was the trade? Short bonds, short dollar, buy gold, buy Bitcoin, buy stocks, buy inflation. And
right.
it's the same setup. And there's a kicker this time of, if we start to get those kinds of prints in the next month or two, or we start having shortages in the United States of America in the next 1 to 2 months, I think there starts to be like a
Confidence
revenge and
crisis.
anger, the anger trade,
Oh,
the revenge
oh,
trade, right?
there will
Like,
be. If I can't get my simply watermelon juice, I'm going to be pretty hard to deal with, Luke.
there's
That's my
and and I joke about it, and it's everybody's on one side of the boat right now, which is
yeah,
hashtag America. We can't win. The Chinese are going to lose. What if we wait
yeah,
1 to 2 months and you've got dollar down, inflation up, interruptions, big supply chain disruptions, and a slowing economy and bigger deficits? So Doge didn't work either. That
yeah.
is like Wrong, 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 wrong. And everyone that's wrong has to get right. And when they want to get right, they're not going to do it, hey, scale me over the course of a day. They're going to be, one
Yeah.
half done now, half done.
GMO,
Yeah.
GMO, get me out.
Get 'em up. Get me up. That's right. So
Okay.
that would be the narrative that would fit that. Now, that's, within that, we have to keep in mind that move chart, right? I would always be
Yeah.
checking against that move chart because they are going to suppress vol. But yeah, it could get a little messy.
Yeah, they're not bigger than the market. Not on the long end. They're not bigger than the market, are they?
Well, they can be, but they have to choose, right? A choice is about to be forced on them, which is you can save the bond market or you can save the dollar, but you can't save both. And that's the classic choice that all emerging markets have always been forced in our position. And we've never had to do it because we've had the reserve currency, the way it's structured, capital flows here. But remember, go back to what we started off the conversation with. The Trump administration's policy is take your capital somewhere else. So all of a sudden, we can have some version of that happen here. And there isn't probably 1 in 100 traders that's ready for that if it happens because they've never seen it in America.
Yeah. Yeah, we've never really had a big credit crisis, have we? Even in the Depression, what happened to our credit rating during Roosevelt? Did we maintain it? You're a student of history.
I don't know about the credit rating, but we devalued ultimately, but we were the last to
Oh,
devalue, right?
oh, right,
Um, and it speaks to, you hear Bessent saying it over and over. Well, we're the debtor in this situation. China's the creditor. So we saw from the Depression, it's the creditor who has the worst problem. And like he should know better because
well, yeah,
it's, yes, and the debtor has hyperinflation. Like you look across Europe, the five biggest industrial powers in that time, two of them hyperinflated and
right,
three others devalued massively. So like, yeah,
yeah. So maybe it'll be the other way around. This time we don't
I think
deflate,
it,
right?
I think
Yin
that's the
yang.
message, right? If you call it the Chinese 10-year against the American 10-year, and obviously China doesn't, open capital controls and what have you, but the bonds are doing exactly what they should, right? Our yields are going up and their yields are going down.
Do you think China's going to? I really don't think they're going to do a deal until um, uh, President Trump makes a gesture to bring down tariffs, and maybe they won't even. Maybe this is their opportunity to do what they've always wanted to do to dethrone the U.S. Xi doesn't have to face elections in 26. Their population, sure, they're getting hurt with manufacturing job losses, but I think they hold the cards and as far as not having to blink. And I think they just want to let them twist until the end of the deadline, the extension.
I think so too. I think so too. I mean, I had a friend of mine who's been in China. He's an American. He's been in China for 30 plus years and knows it very well of course, by virtue of that. He said, Luke, as soon as Trump became the front runner last year, exporters started stockpiling cash. He said, most of the exporters I know have 6 to 12 months of cash. He said, can your consumers go 6 to 12 months with empty shelves? Can your businesses go 6 to 12 months with empty shelves? And that's what we're facing. And so, the state media last week in China came out and had a recommendation that they need to revisit Deng Xiaoping's on protracted warfare essay from 1938, which was after the Japanese had like run through there and been just slaughtering citizens.
Right.
So I don't get the sense that the average investor realizes that the Chinese might be digging in here and have the ability to take pain for maybe longer than we have, to your point. And then the question is, okay, well, what does that mean for markets? Are you saying sell it? I don't think that's sell stocks anymore. I think that is sell dollar, buy gold, because I don't think they're going to let it reflect in rates beyond a point and in
Okay.
the long run. And so then you're into this COVID too. It's going to accentuate COVID two economics, right? It's disrupt the supply chains, deficits go up, volatility suppression in the treasury market goes up. We know what to do with that. That's dollar down, gold up, Bitcoin up, stocks up. Yikes, inflation up.
Well, I remember this is a weekly 3 weeks ago. I showed people this chart, and this was a weekly candle when we had the low in the S&Ps. I said, would you rather be long a market with this candle or long a market with this candle? A blue candle or a red candle? So the market could do okay with all of this stuff going on. Do you think that we're setting up for new highs, Luke, or you think we're going to revisit this? I think they called it a 3 sigma event, um, some kind of sigma fraternity,
I,
right?
yeah, I think I think we're going to revisit new highs just because
Yeah,
I ultimately think, and I've changed my view. If you'd asked me this 2 weeks ago, I would have said, going lower.
yeah,
But, so some of it is watching what the markets are doing, but my view on it has changed with some of the commentary, et cetera, which to me is I think we're now into COVID 2.0 economics. And
okay.
I think it's going to be reflected more in the dollar and in the price of gold than it will be in equities.
Yeah, the dollar had a pretty weak response. The market had the best response in recovering. Um, the dollar, this is its response, pretty muted. I think we could
Very,
maybe,
that's
yeah,
ugly.
I mean, it's like a dead animal. I thought we'd get to 101, and then maybe we will, depending upon what happens this week. And then I'm looking for 94. But a lot of guys that I follow and that I look at the dollar, and that's just going to be the end of wave one down, Luke. So we could enter a period of on the dollar of let me just it'll complete this move that we had back in 22. All right, this was 16, 15, and from here 94 and 95 is equality. And that this will be the first wave down if you're a dollar bear. And if you're a dollar bull, this is an ABC and we're going to blast. I'm in the camp that, we'll just correct this fall from 94 to 110, maybe get back to 103 or so. But the dollar, there sure is a lot of pessimism in the dollar compared to 2 months ago. I hear it on, just news, CNN, Fox, everyone, oh, the dollar's a dollar. Pretty soon we'll see commercials from McDonald's where they'll go, the dollar's down. Makes it hard, makes it hard for me to, stay too bearish down here. I was
Yeah, I think
here,
it's
you know?
yeah, I think it's in the short run. I agree with you that like the sentiment is so negative. But I'm not hearing anybody like on one hand, yes. Now go to those same people and say to them, the US has lost to China and
Yeah,
needs to retrench and reinvest and watch the reaction. They will tell you you're crazy. They will tell you you are anti-American. They will tell you you are a panda hugger and they will curse you. I know this because it happens to me.
yeah.
And that tells me,
There's
away from
plenty.
sort of the
Yeah,
short-term trading side, like I think the dollar's
yeah,
going way lower. And oh, by the
yeah.
way, there is no world in which we can accomplish what Trump and Bessent are trying to do without the dollar being a lot lower than 94, ultimately.
What will it take? 80,
I think
70?
below 80. Yeah. I think in the
Yeah.
70s and maybe in the 60s, 3 years out.
Yeah, I know of a guy that has those targets, 50s, 60s out there. That's a pretty big devaluation from what's already been a big devaluation. Um, I so let's talk just a little bit about anything out there geo-wise that you're concerned about.
Anything out
With
there, what wise?
uh geopolitically. Do you
Oh,
think that
geopolitically.
you think there's going to be a move on Iran?
I don't know.
Yeah, okay.
Yeah, I don't know.
You used to talk a lot about oil as being a
Yeah.
very important part of the economy. It's not just what you put in your tank. Can you explain to me, is it OPEC really just going for market share that they keep increasing production after previous increase of production into a weak price structure, I actually think we might be bottoming here. But what's the point? Are they doing this to help President Trump out because he did talk about lower gas prices? But this is going to impede getting U.S. producers to go out, and there's no drill baby drill at 55 WTI.
No, I
What do you
don't.
think of oil?
I don't. So overall, I think oil is going to stay in a 65 to 85 range, and it's below the end of that range. So I think you could get a snapback. A reason I think that is for what you just said. I mean, last night you had two different oil producers saying they're cutting capex. Diamondback came out and
Okay.
said Permian's peaking and rolling over at these prices, which seeds the oil market going forward to Putin and OPEC. Um,
This
the other
administration doesn't like that. I
Well,
just
and it's
know
one of
that they
these, yeah, it's another one of these things where this administration has a number of things that are
conflicting.
contradictory to each other.
Yeah,
They
yeah,
can't, right? So like we want to reshore manufacturing. Great. At $50 oil, the ISM in the US is going to 40 to 45. The US manufacturing sector is going into a recession, followed by receipts, which will drive deficits up.
yeah.
And so now you're going to have higher upward pressure on yields in the 10-year. The Besant says he wants to term out the debt. Well, at $55 oil, Saudi's going to drink his milkshake. Saudi's
Yeah.
going to step in front of him and issue 10-year dollar paper. And I'd quite frankly probably be more inclined to buy 10-year Saudi dollar paper than I would American 10-year dollar paper. And it's probably a little bit of a yield pickup. It's certainly no worse credit risk. Um, and so that's going to hurt his ability to term out that. The other thing I would tell you is if I wanted to get the dollar down really fast, I would start cutting U.S. oil production, right? If we go from if U.S. oil exports go down, think about what our trade deficit will be if U.S. oil
Yeah.
production drops 20%. Dollar
That'd be
exports
huge.
are going to explode higher.
Yeah. Okay. So they should call you and bring you into the cabinet, I think. And you know what? You don't have to call Luke, but you need to read Luke and consider subscribing. I learn every time I'm together with Luke, and at the minimum, just at least sign up here so you could. I'm just looking for Luke's. Oh, here we do this. Here's the guy,
There he
and
is.
and go and check this newsletter out. All right, and it's actually true because I'm a pro, and the noise is bothering me. And
It's very
give
noisy.
him is very noisy. I guess I could put my earplugs in, but this is he provides great research. He's been right as far as asset allocation, and I think you're going to need guys like Luke more than ever because you can't just buy a spider and go out to the golf course for 3 years anymore.
No, no.
So, I appreciate you coming here all the time, Luke, and I know I could ask anything and I'll get an answer. And the questions I ask I want the answers too, not just for the audience. So appreciate it, buddy. Thank you
No, I
very
appreciate
much.
you having me on. You've been a long time and early supporter, so I'm much obliged and I appreciate you.
Luke Gromen, everybody. Follow him at a minimum on X and go to this website and check him out. And if you're confused about what's going on, and Luke's not a trader, but it'll help you get straightened out on some long-term holdings so that you could sleep at night. We all need our rest. Take it easy, buddy.
All right, thanks, Dale.
All
Thanks for having
right.
me on,
So,
bud. Have a great
all
one.
right, buddy. So that's a wrap, everyone. You could join the team in 13 minutes on the morning edge. And hope you enjoyed Luke. So Luke says there is a possibility of that, and Blake's technical work today with TLT ended up being confluence for me. Uh, when I see someone I respect and uh, maybe doing things different technically, coming to the same conclusion, builds my conviction. So anyway, guys, don't just count your pips, count your blessings, and join, take advantage. I think they're going to pull the offer soon. So if you want to be liberated, then you have to upgrade your hit rate. And I believe your hit rate's going to get better in the community. So adios, everyone. Have a great one. See you tomorrow.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.